Hello, it's Brad, Laurie, or BlockchainBrad, and today I'm speaking with none other than Anthony Pompliano. He is certainly well known throughout the crypto space. It is truly an honor to have you on the channel, Anthony. Thank you very much for your time.
Absolutely, thanks for having me.
No worries, mate. Now, for those on Twitter, for those on all different platforms, many have been excited about this interview. The objective is to be entirely transparent and also to be objective when it comes to putting forward different ideas and viewpoints. And today I'll be asking as many questions from both the community and myself with regard to BTC and beyond. So Pomp, without further ado, let's get really stuck into this because it's rare to have you on the channel or indeed on any channel. Firstly, as an introduction, Off-Chain, it's a well-known podcast. If you'd like to know more, you can certainly go and look at that with Pomp. And also he is a co-founder of Morgan Creek Digital Fund as well. So once again, thank you. And it's exciting to have you on. Let's talk Bitcoin. Let's get straight into it. Pomp, you're an advocate for Bitcoin. You speak right around the world at different conferences. You're constantly on Twitter and other platforms. But in a nutshell, describe to us what BTC means to you.
Freedom.
Freedom.
Very simple. I think Bitcoin is an asset that can mean a lot of different things to different people. But ultimately, what it means is it puts people back in charge of their wealth. The two things that probably mean the most to me are the lack of seizability or censorship of the asset. So people are able to do with their money what they would like to do with their money. And then the second is from a structural standpoint, having a disinflationary or deflationary asset like Bitcoin can really change the way that wealth inequality has occurred, or even reverse that wealth inequality that's spread throughout the world. And it's because it attacks the one thing that is structural, right? So previously we've been able to go after the inflationary nature that drives wealth inequality. And so when I say the word freedom, that means a lot of different things to different people, but ultimately I think that sums it up pretty well.
Right. Well, one of the things you do talk about a lot is SoV, or store of value, and I wanted to really extrapolate and explore that precisely today. Can you talk about the distinctions that you often make between store of value and currency, particularly in light of a lot of the discrepancies from other parties where they have their own very strong opinions of what BTC actually is today?
Yeah, look, a store of value is one of two components of a currency. The second is a medium of exchange. A medium of exchange is simply a belief system, right? So throughout history, people have used everything from seashells to rocks to pieces of paper to gold, etc. And as long as two parties in a transaction believe that something has value and they're willing to transact goods or services, it becomes a medium of exchange, right? So that one to me is pretty straightforward and relatively simple. The store of value is much more important for a currency, mainly because you need more than just the two people in that transaction to see that it has value, right? You need kind of a larger buy-in to the store of value. So if you look at something like real estate or land, that's been a store of value for a really, really long time. And what are the components of making land valuable? You're able to obviously use it for some sort of utility, but also you're able to purchase it, and there's only so much of it, right? So in certain areas, land can be much more expensive than others. So take Manhattan, for example. It's an island. It's very small. Lots of people want to live there. And so that land is very, very valuable. If you go to somewhere in the middle of Ohio or Missouri or somewhere else, it's not that that land is any different from a actual makeup. It's just that there's less people who want to live there, and therefore the price is lower. But that land still has value because somebody will buy it for some price.
Right.
And so if you look from a store of value standpoint, something like Bitcoin, I think it has a lot of the same properties in that it has this artificial supply cap. And there's obviously more and more people every single day that are electing to want Bitcoin or store their wealth in Bitcoin. And therefore, it's served as a fantastic store of value over the last decade.
Right. And it's also interesting, we're talking about one of the fundamental properties of money or of currencies. You mentioned it's one of the core functions, being an SOV of money itself. And then you overlap that or overlaid that with the idea of an asset, and it made allusions to also investments. So we're going to really break this down so we understand it, and we allow people to also do the same and break this down into definitions. Now, with regard to asymmetry, you often talk about Bitcoin being an asymmetrical asset, but also you've made very clear allusions to inverted correlations to other markets, whether that be the S&P or gold. So there's a really strong perhaps conflict in those respects, because in one breath you've talked about some instances of inverted correlations, and then on the same you've also said, in another breath, you've said that there's no correlation. Can you just clarify for us what you mean when you say asymmetrical asset?
Yeah, so there's a couple of pieces to that question. The first is, let's just go through definitions. So a lot of times I will talk about a non-correlated asymmetric asset. Non-correlated simply means that if you compare Bitcoin's price movements to things like public equities, gold, etc., there's no correlation between those price movements, right? So the reason for that is really the drivers of value. If you look at public equities, for example, the drivers of value there are GDP, earnings, profitability, interest rates, etc. Bitcoin is unaffected or not driven by those price values. It's much more of a network effect type business. And so you've got kind of different value drivers, so you don't get the correlation that you would see with public equities and other assets. Mm-hmm. In terms of the asymmetric component, what that basically means is the upside is much, much greater than the downside, right? Anytime you make an investment, you're talking about a potential of 100% loss of capital. Right. And so if I put, $100 into an investment, whether that's real estate that is a public equity or Bitcoin, I could lose 100% of my money. So it's kind of a 1x downside. Mm-hmm. On the upside, if I can only double my money, right, then basically I can double up or I can lose 100%. And so you kind of have this, balance between the reward. Asymmetry basically says that I can lose 100% on the downside. If I make 10x or more on the upside, then there's an asymmetric outcome on the positive side compared to the downside, right? Kind of 10x plus compared to 1x on the downside. Right. And so Bitcoin, obviously, being early technology, has that asymmetry. Now, you specifically asked about the difference between non-correlation and inverse correlation, right? Yes. So historically, Bitcoin has been non-correlated, meaning that there's no correlation, positive or negative, to other assets. At times, especially this year when there's global instability, take the month of May, for example, when the U.S. was engaging in these trade wars, lots of kind of uncertainty and instability around the world. Bitcoin has gone from non-correlated to actually inversely correlated, meaning that when public equities dropped in value, Bitcoin's price went up in value. Where gold's price dropped, Bitcoin went up. Now, Again, it was only for a 30-day period, right? But during that 30-day period, Bitcoin was up 55%. The correlation to public equities was negative 0.9. And the correlation to gold was negative 0.8.
Right.
So again,
just to jump in there though, Pomp, I want to ask you though, given that the nascency, given this is a very early market, as you've mentioned before, do you think that there's some risk though in suggesting in some respects there is that inversion, that is that inverted correlation, is particularly when, for the most part, and for the more macro assessment, there is simply a non-correlation of this asset in comparison to others?
Yeah, so whenever I describe Bitcoin, I always talk about it as a non-correlated asymmetric asset, but I'm very careful to call out, at times it has been inversely correlated, right? And so I try to always caveat it with, again, the month of May is only a 30-day period, right? And It's happened a couple of times. By no means is that the kind of average performance of it over the last 10 years, but it's important to have those data points to understand it's not always non-correlated. At times, it's even been positively correlated, right? There's been studies that showed that for kind of 2 to 4 week periods, Bitcoin has moved in lockstep with gold, for example, right? And so again, there's no kind of perfect science here in terms of a mathematical equation that will get us an answer that everyone will agree on. I think that there's a whole bunch of different data points. People will cut that data how they want, but I think that there is some general consensus over a long period of time that the non-correlation is a good way to describe Bitcoin's performance compared to other assets.
Right. So in the future, do you expect that there'll be more consistent correlations, whether they be inverted or like? And obviously, you've mentioned things like gold and things like the S&P. Do you think that we'll see a shift? And if so, why?
Yeah. Again, my kind of high level expectation is that we'll see more of the same, meaning that, it'll be a non-correlated asset majority of the time. At times we may see either positive or inverse correlation to specific other assets. The reason why I think that non-correlation will stick is really just, again, going back to those value drivers, right? What drives the value? They're two different things. And so you would expect non-correlation from those assets if their value drivers are different. What I will say is that Bitcoin obviously thrived during, one of the longest bull markets in history from a macroeconomic standpoint. And so as we get towards the end of a cycle and there's going to be some turnover, when it happens is anyone's guess. But to see how Bitcoin will perform during some sort of recessionary period is going to be quite interesting. And I think that it's something we're paying attention to.
Right. And I guess the big question also is, to what degree is this circumstantial? We really don't know. And those that support other schools of thought have suggested that be the case. And obviously you don't. But with regard to the tech, I want to move to that for a moment, because that is obviously fundamental to the integrity of the big B and the little b, as you call them. Now, what are the fundamental technological assets, Pomp, of BTC? And what makes it stand out, in your opinion?
Yeah, so the one big thing to think about here is, what's the corollary example to Bitcoin, meaning the large B, right, the system, and then small b being the asset. Well, the Bitcoin network is a settlement network, right? You're able to send assets and settle those transactions without any centralized third party. And so the example I always give people is, if you compare Bitcoin to gold, for example, right? Gold was money for a really long time. At some point, we decided that gold was not the most efficient way to move value around the world. It's really heavy to ship to somebody. You've got to shave off pieces of it in order to pay folks, etc. And so we went to a gold-backed currency, meaning that we actually created paper claims on gold, right? So the gold was still the money, but by creating a piece of paper that was a claim on the gold, we could then share those pieces of paper much easily to transact. Bitcoin is very similar in that today, if you wanted to send a piece of paper to, like a paper dollar, if you wanted to send that to somebody in another country, it's actually quite slow. You got to put it in an envelope, you got to put a stamp on it, you got to mail it. It'll take 3 to 5 business days to get there if you're lucky, right? And so that's not really a great way to build a financial system by mailing physical money around. So we created an electronic system on top of it. And by creating that electronic system, what now we move is we move ones and zeros on a screen around the world, and the banks settle those transactions either end of day, end of week, etc. And so it creates a more efficient user experience for those who are trying to transact, right? So as you see kind of gold to paper money to electronic money, etc., all of those layers, right, if you kind of think of it that way, are getting more and more efficient. It's creating less friction for individuals to move value around the world. Now, Bitcoin's going through the exact same thing. Where we started out, right, everyone who's yelling and screaming saying it's inefficient. Well, compared to shipping US dollars in physical form around the world, Bitcoin's actually much more efficient, right? Yeah, yes, it may take a 10-minute to actually settle your transaction, but that is much faster than mailing a letter to China, Australia, Europe, etc. from states. And so what happened is we see people building kind of layer 2 technologies. Eventually there'll be layer 3, layer 4 over time. This is only 10 years old. And so you gotta really keep in mind that there's no money in the world, right? Literally no currency in the world has simply one layer. They all have multiple layers to them. And that's because that is how money, the evolution of money occurs, is you continue to reduce friction and increase the efficiency. Bitcoin is at the very early stages of the same thing.
Right. Well, what's very interesting is that when we see your tweets, when we see you engage in social media and even in conferences, a lot of the narrative is actually about that HODL philosophy, that store of value. Yet when we're speaking today, Pomp, we're talking a lot about currency. So I really do want to focus on distinguishing those two different camps and schools of thought. Now, going back to the asset itself, the little b, some of the things you talk about openly are things like cryptographic security. You talk about portability, divisibility, fixed supply as an asset, and then that unseizability as well. And transparency is a given in a blockchain that's not really spoken enough of. Is that a good summary, though, those points I mentioned? Or are there any of those that you think really stand out to articulate the fundamental value of BTC?
Yeah, again, going back to this idea of Bitcoin is freedom, right? I think that Bitcoin is the value proposition is different for different people, right? So if you're somebody who lives in a country where you're worried about your government or others seizing your assets or seizing your wealth, the non-seizability becomes really, really important. And actually maybe the most important thing, right? If you live in a country that has hyperinflation, right? Now, all of a sudden, the disinflationary and deflationary structure of Bitcoin may become the most important thing, right? If you are somebody who is sending money, let's say that you're a NGO or a nonprofit, you're trying to send wealth to those in an affected area, but you're worried about corruption and theft, right? Now that transparency becomes really, really important. And so all these different aspects of Bitcoin to different people or at different times can be the most important. And so the way that I think about this is there's certain criteria or properties that this asset has. Each one of them has varying degrees of importance, but it's less about what's important to me, and it's much, much more important to the people who are using it, right, at that time. And so we've got to keep an open and flexible perspective on this because the world's not binary. Right? I try very hard to not get into kind of these answers where people say, you know, why is Bitcoin valuable, right? And as you can see with my answer, it's, well, Bitcoin is valuable to different people for different reasons, right? But here are the properties the asset has, and you can see in different examples why each one of those properties could be super valuable to somebody. And we have to remember that, you know, again, there's 7+ billion people in the world, and you're never going to have an asset that has one single value prop for all 7 billion people, right? Those people all live different lives. They live in different environments. They live in different cultures and different regulatory jurisdictions, et cetera. And they're looking for something that solves their problem, right? And if you could have an asset that can solve their problem and not worry about solving everyone's problem, then now you become much, much more likely to be adopted by that person because you solve their specific problem. And ultimately, at the end of the day, we're all self-interested individuals. And so that's what people are looking for.
Right, and you raised an interesting point because, again, that use case, that fundamental purpose for BTC has actually morphed over time, as you'd be well aware from the cypherpunk movement to now, and even between that, even with international jurisdictional issues and even the agenda of those in developing regions where, in many instances, their currency is so volatile, they're looking for hedges, they're looking for alternatives. The use case, the motives, they're all very different depending on individual circumstances. But today, Pomp, I really want to get some clarification of the asset itself, because that is fundamental, regardless of the motive of those who wish to use it for whatever use case. Understanding the fundamentals is important. So with regard to gold, I wanted to switch to that from one moment, because you had many discussions. You've spoken with Peter Schiff, a well-known proponent of gold. Now, what are some of the key distinctions between gold and BTC, especially in light of the recent move to tokenize in gold, essentially, or have a tokenized representation utilizing the blockchain? A lot of things happening in the gold camp to distinguish to distinguish and to isolate a clear vision for digital gold, as opposed to the narratives we see of virtual currencies and BTC.
Yeah. So first of all, you know, I've been very clear from early on that we have two investment theses. One is that people will trust algorithms and software with their wealth. And obviously, we think that is kind of fermenting itself in Bitcoin itself. The second is that every stock, bond, currency, and commodity will be digitized in the future. So these kind of tokenized gold is just another permutation of that. And I think that type of trend will continue. Now, what's the difference between Bitcoin and gold? The big things here are, you know, I don't even worry so much about like explaining Bitcoin's value proposition as much as I try to explain what the challenges with gold are, right? Obviously, it's heavy. It's really, really hard to actually transact in gold with other folks. But there's more kind of structural issues at play that I think people don't really think about. So the first is how much gold was produced today, right? How much gold was actually dug up out of the ground? We don't know. And not that that's a huge problem, but the lack of understanding and the lack of knowledge compared to an asset where you know exactly there's 1,800 Bitcoin that were created in the last 24 hours, right? That comparison between we know how much is being created versus we don't know how much, that's a big advantage. The second thing is the divisibility, right? The ability to actually, with the click of a button, change the amount that you are going to send to somebody is a huge component. The lack of Caesarship, right? So there was a tweet that went viral on Twitter when a lot of stuff in Venezuela was going on, where there was a family who was at the airport and they were trying to leave, and they had actually taken their wealth, put it into gold, and they had the gold bars seized at the airport. Now, I don't think that that's something that happens to people every single day, right? I know it's not. But again, it's one specific data point that shows if they had Bitcoin, it would not have been seized versus that gold bar. And so I think that you can go down the line and kind of illuminate these differences between the two assets, right? But I always bring it back and I say, we don't live in a binary world, right? We do not need gold to quote fail in order for Bitcoin to be successful. In fact, I actually think that, and part of the conversations with Peter Schiff and other gold bugs is we agree on like 90-95% of this stuff, right? In terms of the macro issues at play, the fact that some sort of hard money or sound money is really important, et cetera. And so what you get is the 5 or 10% disagreement is just on what is the asset that will be best moving forward, right? Now, what I always discuss is this idea that if you look at Bitcoin and gold, the biggest difference to me is the asymmetry on the upside, right? So let's say that both gold and Bitcoin are successful. The odds that Bitcoin is going to increase in value in an asymmetric way versus gold, there's much more confidence that I have, and I think many people have, that Bitcoin's price will appreciate at a rapid pace versus gold. That doesn't mean that gold is bad. It just means, again, what is the risk reward that investors are looking for, right? I'm very clear that I'm a young guy, right? I'm able to take much more risk than, say, somebody who's in their 50s or 60s who's looking for wealth preservation versus wealth creation. And so you've got to understand that the assets themselves are not good or bad. It really comes down to who is it that's looking at the assets, what are their goals, what's their risk profile look like, and then you can start to make a decision as to which assets make sense, and then also what is your capital allocation to these assets, right? You don't have to be 100% gold, 0% Bitcoin, or 100% Bitcoin, 0% gold. I think that all of these different assets play a role in a portfolio, and based on that risk reward potential and appetite, that's really where you can get into the capital allocation game, and you can start to create a portfolio that makes sense for that individual investor.
Right, and that's where we start moving into the conversation of portfolios, and I do want to get to that with you, Pomp, later and ask you those direct questions. But just going back to some of the things with regard to the discussions and debates you've had with Peter, he certainly doesn't have the same position that you have with regard to Bitcoin. Whilst you both clearly support the value of gold, he's made very direct and controversial comments that Bitcoin itself he regards as a non-asset. And one of the arguments he puts forward is that Bitcoin doesn't have that physicality. It doesn't have that element, doesn't have that, what he would argue is that true and organic trust built into it. And he says that you rely too much on cryptographic proof that can be open source, and then by default can be appropriated quite easily and seamlessly. So what do you say to his fundamental argument that the physicality of this really does create a subsequent degree of trust, especially when it's coupled with a history of aesthetic, utility, commodity, and currency use?
I think there's two pieces, right? The physicality of it in some cases is important. In other cases, it's a disadvantage, right? So physicality can be an advantage or disadvantage. He has said multiple times that he lives in the quote real world, not in the virtual world. And what we have to understand is that a lot, right? So I jokingly said to him that take Twitter for example. You're creating virtual messages in a virtual world, right? You're having a virtual conversation with somebody. That doesn't mean that because we don't write the message down on a piece of paper and I send him a letter, that all of a sudden the message doesn't have value anymore, right? So that's kind of a not very kind of legitimate argument in my eyes.
Right.
And then the second thing is trust, right? Bitcoin itself is not built on trust. It's built on verification. And so the idea that, Peter would take gold, he would put it into a vault somewhere, and then basically quote trust that the company that's overlooking that when they say that it's still there, it's there. There's a lot of people who do that with their wealth. I think what you're seeing is a demographic of individuals that are growing up, usually younger, who say, I don't trust, right? I don't trust this corporation, whether it's social media companies, financial organizations, custody companies, etc. They're saying, I want the ability to verify that what you're telling me is true. And so again, it doesn't mean that because you trust a corporation that you're a bad person, right? What it just means is that you're comfortable doing that. I think that there's a lot of people who aren't comfortable doing that. And so they're looking for an asset that they can store their wealth in where they can verify.
Right.
And Bitcoin provides that. So
right.
I think that's a huge, huge difference.
Well, let's talk about, the trust with regard to his view for a moment, because one of the things he does say is that custody is not really an issue, because whether or not you choose to have you have gold stored in your own personal vault, or whether you choose to obviously use a third party, custody itself is a non-issue arguably for both Bitcoin and for gold. But one of the things he does say very directly is that, once again, there's this utility peg to gold itself. He goes on about how utility is the fundamental asset, and not just in the context of all of its different verticals, but also in the sense of the top-down association it has as a store of value, whereby it's stored among many parties throughout the world as an asset, in bank vaults, for example. So he really makes the point that there's this top-down support from governments, enterprises, coupled with historic socio-cultural, socioeconomic reverence for this particular utility and asset. So he really does explore it in a different light. And then we tend to, looking at your argument, look at the cryptographic proof, which once again can be appropriated. So my concern, more so in posing the question to you, Pomp, is what is the fundamental value when we're talking about store of value? What essentially is being stored? If with gold, for example, it's a storage of the substance itself, the physical property, what are you storing when you store Bitcoin?
Yeah, so again, the idea that gold is valuable because of the utility is a pretty ridiculous argument, because there's plenty of other precious metals that can do the exact same thing, right? And so if you compare the utility, well, they all have utility. I can make jewelry out of everything from copper to silver, etc. Gold has a premium over those assets. So to make the argument that gold is valuable simply because of the utility, well, then everything should be just as valuable as gold. Instead, like you described, there's this, quote, belief that governments have, central banks have, individuals have, the socioeconomic belief, right? Kind of just 5,000 years, gold has been valuable, etc. So again, the value is driven by the belief, right? And the belief that that gold is valuable drives everyone else to continue to seek it as valuable. Bitcoin is no different, right? As long as people believe that Bitcoin is valuable, it will continue to be valuable, right? If all of a sudden everyone's, look, let's throw our hands up in the air, Bitcoin's no longer valuable, and the reason it's not valuable is because X, Y, or Z, we're going to move on to something else, then Bitcoin will lose value. Same thing with gold, right? If all of a sudden everyone just said, oh, gold's not valuable anymore, let's move on to something else. Silver is now more valuable than gold, right? Well, then gold would lose value, right? And so I think that we've got to be very, very careful to remember that money in general, whether it's everything from gold to dollars to whatever currency, money is a belief system, right? And that is what ultimately drives the value of these assets. Now, the difference that Bitcoin has is that Bitcoin has a verification that comes with it, right? You can actually verify the assets on a global basis in real time. And there's much more transparency to the system than in any other money system in the world, right? I think I've tweeted one time that I said, Bitcoin is the most transparent money ever created, right? And again, 2,000 years ago, nobody cared, right? Actually, they didn't even understand transparency was important when it came to the money system. Today, it is incredibly important to have a transparent money system like Bitcoin. And so I think, again, it's really hard to argue with data. This isn't a thing that's been around for 6 months or 12 months. It's been around for more than a decade, right? And there are millions of people in the world who elect to store their wealth in this transparent software-based store of value and medium of exchange. And I don't think that that's going to change anytime in the future.
Right. Well, let's talk about that in the context of fiat, because one of the arguments proposed or put forward, as a converse argument, is that fiat is likened more so to BTC than gold to BTC, in the sense that both systems of fiat and potentially BTC have a degree of belief built into them. But with gold, moving back to that physicality, despite the narrative we hear of utility, if we move it forward and just talk about the degree of inculcated trust when it comes to that physical asset being utilized in various forms, whether that be an aesthetic, whether that be a utility, whether that be a commodity or a currency. That's built over millennia of proof in a global sense. So when we have that coupled with physicality as proof of the asset, how does that work in the context of belief when we know we can tangibly touch, use, and still store this asset, as opposed to something built on belief where either from a cryptographic sense or from a belief system where we print money, we're talking about a different narrative.
You could touch Beanie Babies, right? That didn't keep that from being valuable forever. And so the idea that physicality is a requirement for value is a pretty elementary and inaccurate argument, right? Just because other assets have physicality doesn't mean that they have value over long periods of time. And
but so, what about that coupled with history, though? If we look at it retrospectively rather than just speculate, and we base it on what we know empirically, isn't there some evidence to suggest that we do actually valorize this particular physicality?
Well, we didn't have computers, right, or the internet or a virtual world 60 years ago, right? I mean, we got to remember that over a really, really long period of time, yes, there was physical assets in the physical world, right? But as the creation of the virtual world or the digital world has happened, now we have digital assets. But this is still young, and the Earth has been around for a really long period of time, right? Humans have been around for thousands and thousands of years. And so the digital world is about 60 years old. That's it. And in that 60 years, we're starting to see all of these digital assets be created. And so we can't, it's unfair to compare 5,000 years of history or more to 60 years of the creation of digital assets.
Right. You raise a good point there, Pomp. What about talking about digital gold versus BTC in its digital virtual sense? I think that's a really fair discussion to have now, since we see quite literally recently the discussions about tokenizing gold and having a gold-backed crypto asset. So are you concerned at all about this propensity for change and this direction that gold's going?
I think every asset is going to be digitized over time. The difference is that the assets that exist in the physical world, right, like gold or stock certificates, etc. I've got a buddy, Lawson Baker, who has a great example of this, right? It's like when the internet was created and the first media company said, oh, we have a newspaper, and that newspaper we're going to simply copy on a copy machine, and we're going to create a PDF, and then we're going to upload the PDF to a website. Well, that was valuable for some period of time, right? Because now all of a sudden what you got to be able to do is, if you didn't get the physical newspaper, you could go to that website and read it. The problem was that by simply putting a PDF version of the newspaper online, you missed out on most of the value of the internet, right? And the ability to edit, to have multiple contributors, to add updates, to have dynamic photos, right? To change around how the text worked, right? All these different elements that now media companies leverage by creating their content digital first or digitally native, right? And so taking a PDF version of the newspaper and putting it online looks super elementary today, right? Or archaic. And so I think the same thing's going to happen with assets, where the first steps are definitely going to be, let's take an asset and simply digitize it. Let's create a digital representation of whatever that physical asset is. Eventually, though, you're going to get digitally native assets, right? And I've written previously about this idea of called digital corporations. Rather than simply take the stock certificates and the shares of a let's say Delaware C Corp and just digitize them, right? Create a digital representation of the actual physical asset. What you're going to get is you're going to get companies that simply incorporate on a blockchain. They're going to issue digital shares. Those digital shares are going to be created in the digital world. They're going to exist solely in the digital world. They'll be governed in the digital world, held in the digital world, and it will be a fully digitally native corporation, right? There will not be physical pieces of paper or physical stock certificates anywhere. It will all be 100% digital. We're not there today, right? There's a couple of people kind of experimenting with that stuff. But again, over time, just like we saw newspapers coming online, you get sort of the elementary or archaic versions, in kind of the first implementations, but eventually you do find that innovation, right, and entrepreneurialism of founders will drive people to innovate and continuously innovate until we start into the full benefit of this technology.
And what's clear also, you're alluding to essentially being bullish on the benefits of the blockchain for a business, you know, for enabling the, SMEs, for example, or the whole plethora of verticals. Clearly, you are supporting that narrative. But I want to bring it back to a comment you made recently, and that was with regard to BTC, in that you felt that it hasn't yet progressed to a clarification or reasonable suggestions that it is yet a currency, and that you made the point that there still needs to be significant infrastructural changes, developments, whether that be layer 1 or beyond and layer 2. Now, going back to SoV, if that's the case, Pomp, and we aren't yet at empirical evidence of it being a currency, if SoV is a key criterion for currency, but yet we use the narrative of SoV, what does it make BTC today if we're not yet at the stage of it being a currency?
Well, I definitely think it's a currency, right? There's two components to a currency. It's a store of value and a medium of exchange. I know majority of people who are storing wealth there, right? They put money in, they leave it there, believing that it is going to have the same or more value in the future. So it's a store of value for sure. And there are over 1 million transactions per day where people are sending value. They're using it as a medium of exchange. So the argument that it's not a currency is absurd. And I think that the belief that you have to be on par in a comparison to, let's say, fiat currencies, it is just not true, right? Again, you need it to be a store of value and a medium of exchange. Well, Bitcoin has been the best store of value over the last 10 years, and it is used I think it's the 12th most popular currency in the world, right, in terms of the medium of exchange component. And so when you start to see this data, right, that there was more volume than PayPal, Venmo, or Apple Pay last year, right, in 2018. When you start to look at stuff like that, it just goes to show, again, I think that this asset is highly, highly misunderstood, and the public narratives don't align with the data. And so I'm not very concerned with what the public narratives are. I'm much more concerned with looking at the data, having a kind of a first principles thought process here, understanding what my personal opinion is about how the evolution of technology will occur, how more macro and socioeconomic stuff will play out. And obviously, I've come to the conclusion that this asset is something that I want to spend a lot of time on, and something that I think is going to thrive in the future. And so that's what we're doing.
Right. So if it's clearly a currency, though, Pomp, why the constant shill from the BTC community, the Bitcoiners or the maximalists? Why the current price pushing? Why this advocacy for an avaricious want for more, when essentially currencies are supposed to move towards a stable scenario for the uptake, for global adoption?
Well, the US dollar has more people shilling it than Bitcoin has shilling Bitcoin.
But with respect to USD, it's essentially relatively stable in terms of its volatility. So with respect to the way in which we see people engage with BTC, the narrative today, regardless of the graduation towards a more more established, more empirically evidenced currency, a lot of people are not even using it that way. A lot of them are just holding it for want of more.
The US dollar does not lack volatility. The US dollar since 1913 is down 98% in purchasing power. Right? But the reason why we believe that it's not volatile is because $1 equals $1, right? We price the dollar in dollars and look and say, oh, it's super non-volatile. Well, if you did that, then Bitcoin equals 1 Bitcoin, and it's not volatile, right? What is volatile is the price of a Bitcoin when it is exchanged for dollars, and continue to appreciate, right? So Bitcoin has actually gotten more valuable, and volatility, again, right? This is really important. Volatility is not bad. In order for things to appreciate in price, you need to have volatility, right? Volatility works both on the upside and downside. And Amazon is the best example of this. Since it's gone public, Amazon has dropped 90% twice. The intra-year, meaning every year, the average drawdown at some point during that year of Amazon stock price has been 30+%. That's gone for 20 years. That volatility sounds absurd, but Amazon has been one of the best performing stocks. It's one of the most valuable companies in the world today, et cetera, right? Volatility is not necessarily a negative thing because you need volatility for appreciation. And when you're comparing it to an asset that is guaranteed to lose value, right? You're guaranteed if you leave your wealth in dollars, right? 100% of your wealth in dollars, you will lose value every single year, right? That is how we get the wealth inequality gap in specifically the U.S. and other places in the world. And so I think that, you know, when you compare these two from a structural standpoint and also from an actual historical performance standpoint, Bitcoin is superior because it has certain criteria and properties that dollar does not.
The question, though, is does price appreciation really fit with the SoV narrative? Many people would argue they are very distinct. So does it concern you, though, quite sincerely? Let's go to the present day for a moment. Forget about the future and what we envisage for the Bitcoin. Right now, there is a propensity for many in the crypto sphere to hodl, essentially, or to push forward that narrative at the very least. There's a lot of evidence to suggest that there is a lot of fake volume in the ecosystem, regardless of the monumental amount of transactions that are happening. Wash trading is a potentially serious risk. We don't really know how much is actually being transacted for the purpose of currency as opposed to the purpose of trade for, essentially trying to capitalize on the volatility. So my question is, should it be so volatile?
Again, none of that matters, right? Go to the US dollar. How much of the dollar transactions are being used for X use case, Y use case, Z use case? We don't know, right? There was $2 trillion that was laundered last year in US dollars, right? That is 10x the entire size of the Bitcoin market cap, right? It was just 10x of all of Bitcoin's market cap was laundered in the US dollar system. That doesn't mean all of a sudden that the US dollar is not valuable, right? Or the fact that we can't actually track all of the physical dollar transactions, that now we don't know, what the transaction numbers are, et cetera. Again, the value of a currency is that people elect to store their wealth as a store of value and that they will use it as a medium of exchange. Bitcoin is doing that more and more every single day, right?
Right. But according to the finite supply, though, Pomp, with the 21 million to start, does it concern you, though, that people are not just simply treating it as a currency? Not today. They may have adopted that initially with a white paper. Some may still do so, but the majority of people are looking at this as a hodling asset, one in which they want to essentially ascribe value by holding so that other people can essentially join into the ecosystem and increase the value by default through the acquisition of the asset.
Again, that those are two different things and you're conflating them, right? So again, we don't say to people who save US dollars that, oh, you're participating in a system where saving is bad, right? Actually, the structure of the US dollar, because of inflation, punishes people for saving. Think about that for a second. If you save your wealth in dollars, you are punished. That is absurd. So instead, we now have a currency where people are incentivized to save, to not spend their wealth. That's not a negative thing. That's a positive thing.
I understand what you're saying, but is it natural for me to expect in the conversation of currencies to essentially purchase an item or purchase an asset such as Bitcoin and just naturally expect by default about acquiring that as it expands, as the ecosystem expands, that particular asset will increase in value? Because we haven't seen that so much with currencies of the day or in history. The kind of breadth and scope of Bitcoin and the speed in which it's moved in its value would suggest that it's more than just a currency by function and form.
Gold, for example, gold has gone up 40x since we broke the gold standard.
Right. But it's also, it's not treated universally and globally as a currency.
Why is it not?
Well, it's not its fundamental use case. It's utilized essentially first and foremost as a store of value. It does have the functionality of a currency, but the point I'm making is that the paper currencies of the day, they replace that, as you would be aware. And so the expectation globally for most paper currencies is that they don't tend to do 40x. And so my concern is, if we're moving into a digital currency such as BTC, is it natural to see this kind of 40x plus kind of movement with something that essentially we're talking about trying to evangelize trade, evangelize, borderless money?
Yeah, again, the currencies of today are structured to lose value over time. And what that does is that benefits the elites and punishes the average citizen. Right? So we're talking about a structural issue. So saying, oh, but this does something different, of course it does. That's part of the value proposition, is that it does something different. Right? it completely allows you to protest the fact that a government can print away your wealth, right? Imagine waking up and, take in Turkey with the lira recently. People went to sleep and they woke up the next morning, and if they had 100% of their wealth in cash, their wealth was down 25%. It's incredible, right?
Right.
And so again, if you look at over long periods of time, what has every single fiat currency done? They've lost value. What has hard assets done? They've increased in value. It's because the fiat currency is actually being devalued against that. And we're talking about stocks, we're talking about real estate, we're talking about gold, and we're talking about Bitcoin, right? These quote unquote real assets, right? Things that actually are not fiat currencies, they continue to appreciate. This is not a Bitcoin specific thing. This is a asset thing. And the fiat currencies just happen to be the odd one out, not Bitcoin.
Right. Well, let's talk about the potential triad threat with regard to the other people's coins emerging, enterprise coins such as Libra, and then the potential for digital currencies coming from the top down from government. Arguably, and Andreas Antonopoulos would agree, these are serious threats potentially to the premise of BTC. If what you say is true, where you can have this really interesting interplay between an asset that accrues in value coupled with the existence of some sort of finite supply driven currency, then are you concerned at all about agent-centric systems, those that have open inflation that aren't necessarily finite by design and monetary policy? Are you concerned about Libra with their kind of dominance or suggestion of playing in this space, and obviously the government as well?
For sure. And I apologize, I've got about 5 more minutes here because I know we've gone over. But my general belief is that there's 2 components to digital currencies. There's the technology, and then there's the monetary policy that dictates or differentiates the technology, right? And so I fully believe that the world, right, people in the world are going to adopt the technology, right? Everyone is going to use digital currencies in the future. The bigger question is not about digital currencies versus non-digital currencies. It's about the monetary policy differences between the digital currencies, right? So you could look at a world where every single fiat currency actually digitizes itself, right? China's doing this now, and others are thinking about it. Then you have Bitcoin. Then you have something like Libra. Then you have, I'm sure there will be many others that come along with it. Each one of those has a different monetary policy. The technology is very similar or the same in terms of a digital currency. It is the monetary policy where the difference is. And so what I think that we're going to have is we're going to have competition among monetary policies, right? It is going to be very easy for an individual to store their wealth in a variety of different currencies, right? Today, if I live in the United States, it's really easy to store my wealth in US dollars. It's actually really hard for me, or there's a lot of friction for me to acquire other currencies. Well, with digital currencies, that's going to become much easier. And so now there's going to be a free market competition among monetary policies. And the best one will win, right? Because people will elect to move to that currency. And so I tend to look at this as the monetary policy competition is much, much more important than the non-digital currency versus digital currency conversation.
Right. Now, with regard to, overall the way in which people color altcoins, obviously you've seen different words come up like shitcoin, altcoin, a Bitcoiner, a Bitcoin maximalist. What is your position on this? Are you bullish on altcoins? Are you bullish on the overall ecosystem? Or are you indeed a Bitcoin maximalist, as many would, suggest that you either are that or a Bitcoiner?
Yeah, so I think that there's a whole bunch in there. So one, I don't really know what a maximalist is, right? In the sense of, I think that there's a whole spectrum of belief, right? And in terms of Bitcoin itself, obviously I'm very bullish on it. I've articulated my thoughts over and over again as to why that is, and how I think that this is going to play out, right? And so that is kind of the first investment thesis that my partners and I have. The second is every stock, bond, currency, and commodity will eventually be digitized over time, right? And how that plays out, there's a bunch of debate among people, but I think we're starting to see that already happening. And so as you look at those 2 things, right, what I have less confidence in is something like the utility tokens of today, Now, I say of today because it's very important, where if you look at, a lot of the ICOs and all of the stuff that occurred, our general summary of it was, this is fantastic for the entrepreneurs, right? They get to raise non-dilutive capital, right? That they're able to quickly use it as incentives to start or solve the quick start problem or the cold start problem. All these advantages for an entrepreneur. As an investor, horrible investment opportunity, right? Because most investors in the ecosystem are asking, how high can something go? We and our investors tend to ask, how low can it go, right? And so if you look at something like an equity investment where you have liquidation preferences, there's assets that can be sold later on, etc., you have some floor of the investment. When you look at something like the tokens that were used in the ICO kind of mania, right, there was no floor. Everything could go to zero. And so we were less concerned about the upside and much, much more concerned about the downside. And therefore, we chose not to participate. Right.
Right. So you didn't participate in any ICOs. Does that also include the IEOs? Is that followed through?
We haven't done any of them. Yeah. So our whole thing was, we wanted to buy things that were equity, debt, or claims on cash flow. Right. That was really kind of our view of the world, and still is today. Now, when we go out and we look at and say, what could happen in the future, I would argue that Amazon AWS credits is a utility token. Right? It's not actually a token, but it is something that you use to pay for Amazon AWS services, right? And it looks just like a gift card. If you look at Starbucks, right? If you use the mobile app in the store, right, you are essentially using a quote unquote utility token, although it's not actually a cryptographically secure token, right? But it has very similar mechanisms to it. And so I believe that there will be plenty of examples where people actually end up creating some sort of utility or incentive, right, that is very similar to what we saw in the utility token space. The difference is that there was a lot of greed that was going on with those utility tokens, and therefore it wasn't actually trying to solve problems, right? It was more of technology and solutions looking for problems to solve.
Right, and there was also the question of, fundraising, utilizing it both as a fundraising mechanism and then moving forward and trying to assert it as... Right.
Amazon didn't hold an ICO.
Right. But what about in the context, though, of the emergence of other narratives? We've seen some tokens suggest they are essentially building blockchain businesses, and that they potentially can have use cases depending on with their economic modeling matches. There's others that are emerging as arguably competitors to Bitcoin in trying to be layer one currency solutions. So do you see that playing out as well? Do you regard anything of value aside from BTC, and do you have that in your portfolio? Anything other than BTC?
Here's a hot take that I'll leave you with is I don't think narratives matter, right? And the reason why I don't believe narratives matter is because narratives are the conclusion of the consensus, right? So if you think about that, that means that a narrative is derived by a bunch of people coming together and saying, we believe X. As an investor, we know that doing something different than the crowd and being right is where the greatest returns occur. And so the narratives, I actually believe, are a signal as to what the crowd believes. And if you're able to find something that is different than what the crowd believes and you're right, that's where the best returns are. And so narratives, to me, are not very interesting, and they don't actually matter.
But Pomp, with respect, isn't belief systems essentially a type of narrative? If we're suggesting that currencies are a belief system, as you mentioned, underpinning that, isn't that a type of narrative?
But the difference between Bitcoin is valuable is not a narrative, right? It's a data-driven argument. I can prove to you that Bitcoin is valuable. How? Because I will go and I will show you data that suggests there's millions of people that are holding this that has value. There's a market price that is derived by a marketplace, etc. Right? That's not a narrative. That's data-driven.
Underpinning that, though, what's the power of the social phenomenon that it is? And also with regard to the social consensus question as well, what's the power of the people when it comes to the context of BTC? Do we actually undervalue that as something that does sustain and its value?
But again, Bitcoin is valuable is a data-driven argument. Anything that is why is Bitcoin valuable is a narrative, and those narratives don't matter because those narratives, and so the narratives are simply they are attempts by people to explain what is happening, but they don't usually change what happens, right? It's not like all of a sudden we change a narrative and then there's an explosion of adoption, right? That doesn't really happen. Instead, what happens is there is an explosion of adoption and then there's a switch in the narrative, right? And so the narratives are lagging indicators, whereas instead, I think a lot of people believe the narrative is what drives the activity. And so I don't really pay attention to the narratives because I, one, believe that they're going to change over time multiple times. And then two is the narrative to me is just what is the consensus belief today? And if you can actually do the opposite and you end up being right, that's where the biggest opportunities lie.
Right. And are you concerned at all, though, that consensus itself, if you're suggesting that it has absolutes and it's finite and it is essentially tech-centric and tech-driven, some would argue the opposite and suggest there are elements of mutability of the consensus itself. There are core agents that can actually drive that from a social consensus perspective. So is it by core design vulnerable in itself? Because fundamentally, the hard cap can be changed, the finite supply can be changed, the block size can be changed. There is a degree of mutability with regard to consensus. So are you concerned at all that there's those social implications as well? Because obviously we rest on the laurels of the technology. We trust that the immutability, but is it indeed the case?
We don't trust the immutability. We verify the immutability. There's a huge difference there. There's no trust that goes on at all.
But we trust we trust inherently in the formula that we see presented. So if it's socially determined that it can be altered, then surely that's a relevant argument to put forward.
It's not relevant at all because you're not trusting anything. If there was anything that changed, you would see it. You would verify it yourself that there was a change. You don't have to trust that.
But respectfully, if it's possible to change the fundamentals that you're purporting, to change the hard cap, to change the block size, to change aspects that are fundamentally the asset that you put forward, does it concern you that that's possible to be done?
Why would that be concerning? You would have to get a majority of people to elect to make a change, and everyone would know that that change was made. And therefore, if there was a change made, then people would have to determine whether they believe that there was value or not.
Right. But that's the question I'm making, is that potential, because it can be done, does that put the integrity of the whole system at risk? Because that's exactly why different Bitcoin forks happened, for that very reason.
And the market spoke, and all of them are not valuable.
Right. So moving back to the argument of narratives then, you talk about network effects. That's part of a narrative in itself. Is the great value of BTC the network effects?
A network effect is not part of a narrative. A network effect is a data-driven argument that can be proven.
Okay. Right? So if the case is that it has strong network effects, what drives that?
Well, money is inherently viral, right? And the network effect is that it's a structure thing, right? Every person who joins, let's say as a miner, makes the network stronger, therefore more valuable to every other person on the network. So as you get more and more people to come into the system from a computing power standpoint, you're actually making it more valuable to everyone else, right? So that is just the definition of a network effect. That's not a narrative. It's just, it's a definition.
Right. So essentially, the onboarding via the technology, the mining, essentially, that's where you're arguing is the core asset. But can I ask you, why are so many in the crypto space such, vocal advocates for BTC, in the sense where reasonably it could be deemed putting forward a narrative, putting forward their own agenda, and really pushing for a greater expansion of the BTC ecosystem?
There is more narratives and there is more shilling of any sovereign currency than Bitcoin. It's not even close, right? Look, just look in the United States. Every single politician, every single banker, every single business person, etc., they shill the US dollar, right? They price all their goods in dollars. They constantly talk about the dollar. They're constantly explaining the value of it. We have, the president who's tweeting about it, etc. The word shill has a negative connotation, but instead it just said, we're talking about Bitcoin. Very, very different conversation, because guess what? There's much more conversation around the US dollar than there is Bitcoin. And so I think that, again, this is a perfect example of why narratives don't matter. Because whether people say shill or some other word or whatever, it doesn't change the value that Bitcoin has, and it doesn't change the fact that more and more people every single day are choosing to elect to put their wealth in a non-correlated asymmetric asset that's based on software that is super, super, super verifiable.
Does it concern you, though, that there's an intractable connection between BTC and fiat?
All right, I need to go. I'm 20 minutes late to this thing.
Yeah.
Do you want to ask one more question to wrap it up?
No, you can just wrap it up if you want. But is there any way to catch up again later to finish off? There's so much more that I haven't asked yet, and there's so many community questions that I to include the community. Have you got any other time over the next few days to add more to this?
Probably later this week. I can try to find time.
That would be awesome. That way, put it all together.
Sounds good.
Cool. Did you want to just finish it there and just catch up again and then keep going?
Yeah. What do you want me to do?
Well, if you're willing to do that, that'd be great because your internet's really bad right now. It's really bad to keep going.
So let's catch up at the end of the week.
All right, sounds good.
All right. Thank you.
See you, mate. Bye.